Hi guys, welcome back to Reserved Investments on YouTube. So I wanted to do a video where I talk about what I look for when I invest and or buy items for long-term investment potential in the greater antiques and collectibles trade. For those of you that have watched my videos en masse, you already know that I love 5 collecting categories for the long-term asset diversification and or asset appreciation that they offer in the greater trade. And those categories are, I'm sure some of you guys are already saying these categories in your sleep: coins, currency, collectible first edition books, historical documents, and artwork. Now, that does not mean that I recommend you go out and you buy these items and you learn these markets. These are very hard markets to learn, and in most cases, research shows us if you don't have a passion for these items, overall, they're not going to work as a valid investment in your long-term portfolio. So, what I want to do in this video is give you the 5 reasons why I chose those particular items for me to invest in for the long term, and hopefully you can take the practical application of these characteristics and apply them to other antique and collecting categories that you may fathom and or have a passion for, and determine if they're valid long-term investments for your own needs. So, I'm going to start out this video with number 1, which is sophistication. The reason why I like investing in coins, currency, collectible first edition books, historical documents, and artwork is because they are sophisticated markets. Now, what do I mean by that? Well, these markets all have a barrier to entry to enter them. For instance, if you want to start collecting investment-grade collectible coins, the problem that you're going to have is you really have to research and understand the market as it is today in 2019. You also have to be willing to spend upwards of $1,000 per each coin you're going to be buying that goes into your investment-grade coin portfolio. The average person cannot afford to enter that market, number 1. And number 2, if they can afford to enter it, they have to understand that they are going up against other collectors, other investors, other dealers, and other quote-unquote whales who have massive amounts of experience in that market. The chances of you stumbling upon a graded coin selling on Stacks and Bowers or Heritage auctions for a bargain price is slim to none. There are market manipulators out there who understand the graded coin, the graded currency marketplace to the realm where the average person doesn't even have a chance. So that particular market, if you want to enter it, you really have to have knowledge. And most people don't want to spend 3, 5, 10 years learning a market before they start investing in it. And really, when it comes to coins, when it comes to collectible first edition books, you really have to know what you're doing. Same can be said for artwork. Same can be said for historical documents. You have to understand how these markets work and the people who are also operating in the market along with you, because if you're buying up these items at auction, they become your competitors. And when it comes to competition in auction markets, it's pretty much every man for himself, and the person with the most knowledge wins. The person with the most logic and patience wins. And I don't mean wins the item. I mean wins at the market as a whole. Remember, there's something called the greater fool theory, which means that if you pay a record price for something, you have to understand that you were the greater fool. You were the only person viewing that auction who was willing to pay that price. Well, that doesn't mean that you made a good deal or a good investment in that item. The market, when you go to sell that item back into the marketplace, whether it be 2 months from now, 5 years from now, 10 or 20 years from now, that's when you're going to either be rewarded or punished due to current market forces. So you have to understand that there's a lot that goes into a lot of these markets. Number 2 is stability. What do I mean by stability? Well, if I go out and I buy an 1878 Carson City Morgan Silver Dollar graded by PCGS CAC stickered in Mint State 65, which is a gem state coin, and I pay a reasonable market price for it, and I put it in a safety deposit box. 10 to 20 years, I can probably sell that coin at a profit in relation to what I paid for that coin today. That's stability in that particular market. Sophisticated collecting markets have the advantage of being very stable. For instance, there's not too many people that are going out buying $100 million paintings if, in the back of their mind, they don't think that if they need money or if they want to sell that item back on the market, that that item isn't going to sell for at least $100 million, what they pay for that item. The same thing is true in a lot of these more sophisticated collecting markets. Now, are there exceptions to every rule? Yes. Are there sharks out there? Yes. Are there whales out there that you're competing against? Yes. You have to have the knowledge to be able to compete in these markets. Third, low variance of price. What do I mean by a low variance of price? Well, I'm going to tell you. Let's say that I spend $1,500 on an 1881 Carson City silver Morgan dollar graded in Mint State 66. Well, I can pretty much tell you that if I sell that coin back onto that same marketplace, even if I do it tomorrow or if I do it a week from now, that coin, in my opinion, will sell on average after all fees with a variance of plus or minus 10%. What that means is I may sell that coin back on the market, and I may net only $1,350 for that coin. Or on a good day, I sell that coin back onto the market within the next month or so, I may get $1,600 or $1,700 for that same $1,500 coin. There's a low variance in price validity for that particular item, meaning most coins, most pieces of currency, most historical documents, most collectible first edition books, if you're buying right, there is low market volatility. The market is pretty much stable across the board. That's what I look for when I buy items like that. So if I ever have to sell the item back, I'm not going to take a 50% loss on average. Can that happen? Absolutely. That happens a lot. But if you know what you're doing, you understand the market, and you understand how the markets operate, the chance that you're going to lose a lot of money when you go to sell the item back on the market are slim to none. You can really reduce your risk in those markets. Number 4, I look for long-term collectability and has it been established. For instance, those of you guys that love to argue with me and think that Pokemon or Magic the Gathering or graded video games, the prices are just going to keep going up and up and up, and everything's rosy. I can put on my rose-colored glasses and everything's going to be fine. If I spend $10,000 on a graded video game, I'm sure I can sell it back into the market for $10,000. Well, you're dead wrong, and here's why. Long-term collectability in those markets that I just mentioned has not been established. When I go after a historical document or a collectible first edition book or a coin or a piece of currency, I can go back in most cases decades, if not 100 or more years, and look at the value of that item and what it sold for all those years up until present day. That establishes long-term value, long-term demand, and long-term growth. That is what I look for when I invest in items with a manner towards long-term gains over the course of decades as opposed to years. So that's very important. Number 5, track record of demand. This is very important. When you get in certain collectible marketplaces, and I don't care whether we talk about vintage toys, vintage comic books, other items of that nature, even vintage vinyl records, demand changes. Demand changes a lot and rapidly. In fact, the only constant in the greater antiques and collectibles trade is change. A lot of collecting categories right now in 2019 are not going to be around in 2039. Just like right now, what we collect in 2019 is different than what we collected back in 1989 or 1999. The market is always changing and evolving. Well, if you're going after items like collectible first edition books, coins, currency, historical documents, and artwork, usually those items have a massive track record of demand. Now, you may say, well, Sean, what's the difference between long-term collectability and a track record of demand? Well, track record of demand should show a item increasing in value every so often, meaning every several years. That's what I mean by a track record of demand. More collectors are coming into the market and wanting to buy up that item. Now, a criticism that I get thrown at me when I state that is, well, Sean, in characteristics number 1, you just said the barrier to entry is too high. So a lot of people aren't coming into these markets by nature. Well, that's a catch-22. Ironically, even though the barrier to entry is quite high to enter these markets, a lot of people do try to invest in these markets and or learn the markets as they go along. So you have people that are coming into the rare coin marketplace, they're paying $5,000 for a rare coin, and they never bought a coin before. Now, to me, that's a little scary. I would have that person start at the $500 or $1,000 range and go after something that's a little bit less valuable, but also fits the definition of being an investment-grade coin. But to each their own. I can't stop people from doing that. However, you have to understand that there has to be a valid track record of demand for any of these items to continue at least holding their value over the long term. Now, I'm going to tell you something else. Here's the thing about items like this. If you look at the gains, the financial gains for most of these items that I choose to invest in long term, you are looking at a growth rate of 2 to 5% per year. That's it. These items will barely ever increase over the rate of inflation year after year. So you're going to ask me, well, Sean, then why do you invest in them? Because I use items like coins, currency, collectible first edition books, historical documents, and artwork as a way of diversifying assets. I'm not looking too much for long-term monetary gains in those markets. I make the most money in short-term speculative bets, meaning items like this amiibo, or vinyl records, or comic books, or factory seal video games, or Lego sets that I can quick buy and flip. That's where I make the majority of my money. When I want to park money for the long term in the greater trade, these are the 5 characteristics I look for. So I'm going to quick repeat them before I end the video. Number 1 was sophisticated markets. Number 2 was stability. Number 3 was low variance of price overall. Number 4 was long-term collectability established. And number 5 was a track record of demand. If you got anything out of this video, please leave me a comment in the comment section and let me know. Please consider subscribing to this channel. I do have 300 and some subscribers at present day. I would really like to get up to at least 500 subscribers so that I can start doing Q&As and interact with my viewers and a lot of my subscribers in a manner where I can directly help them with questions that they're asking. So if you do like my videos, please consider sharing them. Please consider subscribing. Thank you all and have a great night.